Now that we have talked about the advanced decline line, let's see the second internal that I use, the NYSE Tick. The NYSE Tick is calculated of how many stocks are being traded in an uptick minus how many stocks are being traded in a downtick. As a difference from the advanced decline, which tells us how many stocks are positive for the day minus how many stocks are negative for the day, the NYSE Tick is a very good indication of short-term momentum and direction. So if this is the first time you look at this chart, please bear with me. I know it looks chaotic and complicated, but it's not. Basically, I do have this zero line. So this zero line can help me gauging when tick chart is positive and how many and when tick chart is negative. For instance, in this case, I have at some point I had at the tick chart a plus 600. That means that 600 more stocks were being bought or trading in an uptick. And in this case here, minus 800, that means that the majority of the stocks were trading at on a downtick. Okay. So, and I do have the zero line, and I have few other lines that help me gauge easily the extremes. I have a plus 600 line, plus 1000 line, plus 1400, minus 600, minus 1000, minus 1400. Why those lines? Well, with experience, I've gotten to get these as sweet spots. Like a normal extreme is plus 600, minus 600, and more like skewed stream to one direction is minus 1000 or plus 1000. And then a definitely good extreme is, or a short-term momentum gauge is plus 1400 minus 1400. Okay, so here I have the S&P on the 1 minute and the tick on the 1 minute as well. And I have two basic rules for the NYSE Tick. Number one, it gives me sentiment extremes. For instance, you can see here I have a negative of 900. Let's call it negative 900. And you can see how the market came here, signaling some exhaustion for sellers, and then it bounced to the upside. Now, this is not as straightforward as it looks. It doesn't mean that every time we have minus 900, the market is going to bounce and is an entry. That's more, you have to read this contextual. You have to have the advanced decline, and I use the dollar as well. But it's important for you to know that on extreme signals sometimes exhaustion. Okay, you can see here minus 600 how it bounced to the upside, and then it hits plus 600, and then it pauses, it goes down, and so on. Okay, so that's the first thing I use, the sentiment extreme, right? And the second thing I use is the tilt or the slope of the tick chart. Where is the majority of the candles being printed? And you can see here, it's not complicated. You can see here how the majority of the candles are being printed in the negative side of this chart, right? And when it goes to the upside, it very quickly rejects the positives here, and it goes to the negative side. Here, it spent a few minutes, but then again on the negative side. So the majority of the time, stocks are being sold at the bid, right? Up to this point is 1043 when we hit this extreme, and it goes to the upside. Now, in this period of time, the majority of the tick was printed here, right? But what happens next? Again, starts to go down and spends. Now it's very clear how the majority of the tick is just printed below zero. And you can see here how the market ended up going down. So that's an important principle that I use, the tilt or the slope for the tick chart. In this example, we have the S&P and the tick chart here, and you can see here up to this point, here is 10:13 in the morning. you can see how the majority of the tick, first of all, we opened up on a very good extreme. We opened up in a very good extreme here on the tick chart, 1400. That's not very usual, but tick chart starts to go like more normal here. But you can see how it started bouncing off of zero, right? And the market is just going sideways, either going lower here, creating a lower low here, not from the open, but a lower low here. You can see how the tick chart is spending its vast majority of time in the positive side of the chart. So this is one way to see, all right, the market is about to trend up, and we have to look for an opportunity to engage in this and go long. Okay, and you can see how when it goes negative, right? When it goes negative, look at the extreme. It's just minus 600, whereas when it goes up is minus 900. So evidently it's tilted to the opposite, to the positive side of the chart, right? So here's how you can read the tick chart. Now it's more contextual. You need to accumulate screen time so you can get more experience on how to read this. And by the way, a very good tactic to use the tick chart to get into trades is having key reference areas. If you don't know how to get key reference areas, I'll leave you this video here that I made a few weeks ago, and you can see how a point of exhaustion can mean an entry for you. Okay, here this one is not necessarily a point of negative exhaustion, meaning that now the market is gonna go down. No, but you can see here how if you have this opening range, this could mean an entry for you right here. Okay, and this is not the right risk and reward, but whatever. All right, so you will need experience to learn how to read this, but I can give you two rule of thumbs. Number one, in a range bound market, the extremes could mean the top of the range or bottom of the range, and in a trending market, the extremes just reaffirms the direction. So if you have in the context that the advanced decline is very positive and the tick chart is tilted to the positive chart here, right, and then it goes suddenly to 1400 right here, it just confirms your theory that the market is just going up, right? Whereas if you have a very negative advanced decline and the tick goes to plus 600 or 800, that could mean exhaustion, right? You need to have a contextual. Without looking at the S&P, if you start seeing this thing, you can tell, yeah, the market is just going up. Look at this, okay? And do that practice. Just get the tick randomly and try to gauge what the market is doing, right? Do this type of back test. If you have any questions, just email me or come every day. I trade live at 9:25. If you like the video, please give us a thumbs up and consider subscribing to the channel, and I see you in another video.